Hello, myself Muhammad Abdul Nasir, and I'm a student pursuing my Master of Science in Management in Data Analytics, and my student ID is 2837124. Today, let's see a small case study given to us in the form of Excel sheet data, wherein it shows the data of a Sunset Board financial statements, income statements like cash flow statements, and the balance sheet. So let's get started into our presentation. So in this presentation, let's see a brief introduction, what the data tells us about important aspects of balance sheet, important aspects of income statement, statement of cash flows, recommendations, proposals, and finally we will conclude the presentation. Coming to a brief introduction, the provided balance sheet represents the financial position of the Sunset Boards as of December 31st for the following years 2018 and 2019. So it offers a snapshot of the company's assets, liabilities, and owner's equity at two distinct points, that is 2018 and the year 2019, which enable us to analyze its financial health, how it evolved over the year. So Sunset Boards is a company that is engaged in some particular industry that we are not known about, like in which domain it's working in, example like fintech domain, or it is in banking, it is in marketing, it is in technology, or it is in some AI, or like we are not known about that. So we are given with the data, so we will assess the data, and based upon that data we will conclude some of the points in the following presentation. So hence, we can gain valuable insights into the financial performance, how it is performing based upon the liabilities, assets, and the balance sheet and the income statement it has been provided with. So this analysis will provide a foundation for understanding Sunset Board's financial standings, including its capacity to meet up short-term obligations, the proportion of debt to equity, and the efficiency of its asset utilization. Furthermore, it offers a glimpse into the company's strategy, decisions, and financial management during the following year. Okay, and let's get started with the aspects of the balance sheet. The balance sheet we were provided with the following years 2018 and 2019. So liquidity and current ratio. Sunset Boards increased its current assets from $87,182 in 2018 to 1,21,000 in the year 2019. So we can say there is an increase. Hence, the current ratio improved from 2.02 to 2.05, indicating an enhanced ability to meet short-term obligations. This is a strength that can support expansion. We can say it can be an expansion. So next, coming to the debt management, the company reduced its long-term debt from 1,23,607 in 2018 to 1,40 in 2019. So this decreasing debt to equity ratio, that is after calculating 0.69 to 0.6, reflects a lower reliance on debt financing. So this is a positive move as it reduces interest expenses and financial risk. So if we take more debt, then we need to pay more interest rates according to it, and again we need to pay back them with higher rates. So debt management is very important in the financial analysis. So the next, coming to the asset growth. Sunset Board significantly increased its fixed assets from 3,44,881 to 4,61,088. So there is an investment in this business, and anyone from the outsider can invest in this business. They thinks about it after seeing the asset growth. However, it is essential to consider whether this expansion aligns with the company's strategic plan and market demand. So we are not seeing in any short-term goal. We are looking for the long-term plans, long-term approaches, and the techniques for companies in like improvement and enhancing and expanding the following business, whatever the business is dealing with. So owner's equity, let's see the owner's equity increased from 1,79,952 to 2,34,798. So it indicates the growth in the company's net worth also, because owner's equity is also proportional to the net worth of the company. So this is a strength that can provide a financial cushion for expansion initiatives. So as I am an owner, if my assets are increasing or if my equity increases, I see for expansion of the company as well, because I am earning a lot from that. So coming to the aspects of income statements, let's see with the revenue growth. In order to assess company's expansion potential, examining the revenue account is crucial. So the Sunset Board's income statement should show an increase in revenue from 2018 to 2019. So after seeing the data, the company net sales increased from 4,40,000 in 2018 to 5,36,483 in 2019. So the cost of goods sold also increased from 2,24,000 in 2018 to 2,83,281 in 2019. Uh, this income statement shows an increase in revenue from 2018 to 2019. So we can see there is an the curve is exponential and indicating growing sales and market demand. So this can be strength for supporting expansion. And next, coming to the gross margin, the gross margin reflects, as we all know, that the gross margin is calculated as the difference between the revenue and cost of goods selling, and it reflects the profitability of the company's core operations, increased from 2,15,763 in the year 2018 to 2,53,202 in 2019. So there was a stable or increasing growth margin can indicate effective cost control and pricing strategies in supporting expansion plans. Next, coming to the operating expenses. Operating expenses, including sales, general and administrative expenses, should be scrutinized. Control growth in these expenses related to revenue is favorable. Hence, we can see that the Sunset Boards has experienced operating expenses from 44,121 to in the year 2018 to 57,586 in the year 2019. So this can be controlled. The operating expenses should be controlled, and high and escalating operating expenses can be a weakness to any company, potentially impacting profitability and expansion plans. So next, let's see the fourth bullet, that is the net income. So the bottom line in every company is the net income. So at all, what we will see is the net income of any particular person or the company, hence representing the company's profitability after all the expenses. Sunset Boards has experienced net income of 13,783 in the year 2018 to 15,780 in the year 2019. So we can see there is a some step ahead, like from 13 to 15. So they jump from, like, there is a jump between 2018 and 2019, and it is a clear indicator of improved financial performance, which can strengthen the case for the expansion. We can see this aspect as an expansion as well, net income. And the last is earning per share, EPS. If Sunset Board is publicly traded, we don't know that whether it is a private, it is a publicly traded or not. So if it is publicly traded, EPS is essential for shareholders as well. A growing EPS demonstrates increased profitability on per share basis, which can influence investor confidence and support financing for expansion. So as an am outsider or an investor, if I am getting profits from particular share in the company, I will plan to like reconsider of buying more and more shares, thereby increasing my profit, my financial gains and all. So I support financing, and in this way the company can be expanded as well. And the important aspect for the statement of cash flows. So let's discuss about the statement of the cash flows. Analyzing this Sunset Board's statement of cash flows can help assess the company's readiness for expansion. So the first is operating cash flows. This section indicates the cash generated or used by the company's core operations. A favorable operating cash flow is a strength, as it means the company generates more cash from its business activities than it is in spending. It can support expansion by providing funds for day-to-day operations and investments. Conversely, a negative operating cash flow might indicate operational challenges that must be addressed before expanding. So, if our operating cash flow, if it indicates that like there is a positive and negative. If you are getting positive cash flow, then it is a good indicator for the expansion. But if the operating cash flow is negative, then it might be a challenge for that must be addressed before expanding the company. And the second is investing cash flows. This section highlights the cash spent or received from asset investments like property, equipment, or other companies. A negative cash flow in this section represents significant investments in the business, which could be an indicator for expansion. On the other hand, a positive cash flow from investing and activities may signify asset sales, which might be a source of funds for expansion. So in both ways, whether it is positive or negative, it can be a good indicator for the expansion. And the third one is financing cash flows. So this section reveals how the company raises and repays capital, including loans, shareholder investments. A positive cash flow from financing activities might indicate an external financing for expansion. A negative cash flow might signify debt repayment or shareholder withdrawals, which can affect expansion plans by reducing available funds. So example, if it's in negative, then I as an investor may withdraw my shares, my money from the investment and all. Thereby the expansion plans might be get reduced. And continuing to it, to make an informed decision about expansion, we need to consider the two following things. One is the strength, the other one is the weaknesses. So coming to the strength, the positive operating cash flows indicating a profitable core business, and financing cash flows showing the access to the company capital are strengths that can support expansion of the company. The company can self-finance or secure external financing. Coming to the weaknesses, negative operating cash flows may indicate operational inefficiencies or a need of improved profitability. Excessive negative investment cash flows could indicate an aggressive expansion strategy that might strain liquidity and resources. So in summary, the statement of cash flows is very critical tool for assessing Sunset Board's ability to finance expansion or not. Positive cash flows from operations and financing activities are strengths, whereas that can support expansion. Whereas negative cash flows, particularly from operations, may raise concerns that needs to be addressed before expansion of the company. So coming to the recommendations, according to me, like some of the recommendation that I have put in this presentation after analyzing the data and all for the year 2018 and 2019, Tad should consider the following consider these following points before expanding his business. Some of the key factors are the strengths. Let's start with the strengths: liquidity and debt management. Sunset Boards improved its liquidity with a higher current ratio and reduced its reliance on long-term debt. That is a positive sign for expansion. This positions the company to manage short-term obligations and operate with lower financial risk, which is favorable for expansion. And the next is asset growth. The significant increase in fixed asset demonstrates the company commitment to the growth. Hence, this can be strength if aligned with a well-planned expansion strategy. And the third one is the profitability. Although not explicitly provided in the statements, the growing owner's equity and likely positive trends in revenue and net income, assuming the profitability continue to improve as implied, are encouraging signs, suggesting that the company is generating profits to support expansion. That is a positive sign if we think in a positive way, like though it is not explicitly provided in the statements. And what if the weaknesses are there? Like we can suggest some weakness if any weakness are there in it. So operating cash flows with specific data from the statement of cash flow, it is easier to determine whether the company's operations are generating sufficient cash or not. Whether the if there are negative operating cash flows, this could be indicated that we need to address this issue before expanding. Investing cash flows, this considerable investment in fixed assets should be evaluated carefully to ensure it aligns with the market demand and the company's long-term goals. Overspending on investment might strain the company's resources. Hence, we should reduce the overspending on the resources. Coming to the conclusion, let's conclude this the data we have assessed the Sunset Board statements. So in conclusion, the company exhibits several strengths that support expansion, including the improving the liquidity, effective debt management, asset growth, potentially growing profitability. However, it is essential to address potential weakness in operating cash flows and the sizable investments in fixed assets. Before expanding, Sunset Board should conduct a thorough market analysis, develop a well-structured business plan, and ensure that the expansion aligns with the company's financial capabilities and long-term strategy. Careful planning and financial management will helpful in the successful expansion. Coming to last but not the least, I want to present a small quote from the famous financial analyst Navid Abdali. He said that prices are easy to understand and it is easy to isolate or pick assets based on prices. Understanding the businesses and analyzing the risk is very complex. I feel this is 100% true. So, if any doubts, please write in the comment section. Thank you so much and thank you for providing the opportunity. Thank you.